In today's episode, I'm going to talk about the additional Medicare tax. The reason I'm bringing in the shutdown, though, is because I've seen a lot of people who I hope are just capping for social media and they're bluffing, but they're saying that they are going to go exempt on their W-4, so no taxes will be withheld, and they're encouraging others to do the same.
Welcome to the Tax Relief with Timalyn Bowen's podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 71 of the Tax Relief with Timalyn Bowens podcast. It is November 7th and we are still in a government shutdown and we're still experiencing a reduced IRS force. Listen, in today's episode, I'm going to talk about the additional Medicare tax. The reason I'm bringing in the shutdown, though, is because I've seen a lot of people who I hope are just capping for social media and they're bluffing, but they're saying that they are going to go exempt on their W-4, so no taxes will be withheld, and they're encouraging others to do the same. Listen, if you have had run-ins with the IRS where you owed and you couldn't pay in the past, even if you haven't, that can be the worst thing that you do when it comes to your tax situation, because come spring, when you file that tax return, if you do not have enough taxes withheld from your income, or if you do not make your estimated tax payments, you will receive a CP-14, which is a notice in demand of payment, because you are yet required to pay your taxes. The government shutdown means for this fiscal period, they haven't made an agreement on how the funds should be spent, but they are yet there to be spent. So I know that there are a lot of benefits and programs that are on hold right now because no decisions have been made. However, you are still expected to do your part, and it will come with consequences if you decide to file as exempt. Okay? Now, speaking of that and tax obligations, that brings me back to the additional Medicare tax. This is a tax that is going to apply to we could say high income earners. So for folks who are single or head of household, if they're making $200,000 or more. For my people who are married filing separately, if they're making $125,000 or more. And last but not least, for my people who are married filing jointly, if they are making $250,000 or more, then that's when the additional Medicare tax comes into place. Now, not being petty Betty, anything like that, if you don't fit into one of those categories, you actually don't have to listen to this podcast episode because it's not going to apply to you. Okay? Now, you all know I'm on my personal mission to fill the tax literacy gap. If it doesn't apply to you, but you know someone that it does apply to, sharing is caring. Help me on my mission and share this podcast episode with them. The reason I'm covering this is because I've worked with taxpayers who they have a balance due because of the additional Medicare tax, and they're able to pay it, but in addition to having to pay it, they have to pay unnecessary penalties and interest because they weren't prepared for this additional tax. Okay, so let's go ahead and talk about what it is. The additional Medicare tax is going to apply to Medicare wages, self-employment income, and railroad retirement compensation that exceed the thresholds that I just mentioned. So that was $200,000 for our single head of household taxpayers, $125,000 for our taxpayers who are married filing separately, and then $250,000 for our married filing jointly folks. Now, this additional Medicare tax is not going to be at the same 1.45% that Medicare tax is, okay? It's going to be an additional 0.9%, and this tax is used to help fund the different provisions that came under the Affordable Care Act, okay? This also helps to fund the premium tax credit. Now, if you're not familiar, the Affordable Care Act was passed under the Obama administration, and what it allowed people to do is to purchase health insurance through their state and based on their income receive a premium tax credit, that subsidy, okay? If they paid the whole premium themselves. Now, if they didn't pay the whole premium and it was subsidized, it had to be subsidized by something. So this additional Medicare tax went to help fund some of that. Okay. So for my taxpayers, now that you have that history, who are self-employed and they meet the thresholds that I said, or if you are a wage earner and you have wages that are subject to Medicare tax and Social Security, this is how the additional Medicare tax is calculated. Okay. Anything in excess of the threshold for the filing status, the taxpayer's filing status, without regard to whether any tax was withheld. So when I'm referring to any tax withheld, I'm saying income tax. So let's say we have Roger. Roger is single. He makes $350,000. Okay. So there is a limit for how much that you pay in Social Security and Medicare, right? But for Roger, the amount that he makes over $200,000. So we had him making 350. His threshold's 200. The amount over that 200, he's going to pay the additional Medicare tax on. Okay. And instead of it being 1.45%, it is going to be 0.9%. All right. Now, like I said, we reduce that threshold for the filing status. Then for our self-employed people, anything is going to essentially work the same way. Anything over that threshold, let's say that Roger makes $350,000. He is the breadwinner for his home, but in this scenario, he's married, right? His spouse does not have any earned income. So for them, the threshold raises from that 200,000 that Roger had when he was alone to now being $250,000 because he's married filing jointly. So now he's not going to pay the 0.9% on 150,000. Instead, he's going to pay the 0.9% on 100,000, okay? Because his threshold is different. So when we're looking at this and we have somebody that's self-employed, it's different for them because self-employed people have what we call self-employment tax, which is their share of Social Security and Medicare. So if there's no profit in the business, then that means that we can't calculate Social Security and Medicare or the additional Medicare tax. I say that because if you're self-employed and you actually had a net loss in your business, then that means that is not going to be used to calculate the additional Medicare tax, right? Because there would have to be a profit there so that we have income to make the calculation. Now, with this, sometimes we have different rules for expats, right? In this scenario with the additional Medicare tax, there are no special rules for our expats or those living abroad. All right. So for U.S. citizens living abroad, this is still going to apply to them. All right. Even if they can use the foreign income exclusion, they still have to pay the additional Medicare tax if their income is over the thresholds that we mentioned. Okay. Now, I also want to bring up something that a lot of people don't realize. When you work, you have money withheld for Social Security and Medicare, right? You don't have the option to opt out of it like you do with income tax. The amount that's withheld is roughly 7.65% altogether. Then your employer matches that on your behalf. For the employer, when it comes to the additional Medicare tax, they are supposed to withhold it on your behalf. However, when it comes to this additional part, there is no employer match. Okay? If you're trying to figure this out for yourself, because I know I have some DIY preparers on here and there's nothing wrong with that. You would compute this additional Medicare tax on Form 8959, and the name of it is, guess what? Additional Medicare tax. Okay. Now, this Form 8959 is going to be attached to your Form 1040 when you go to file. All right. Because that additional tax is going to show up on Schedule 2. If you're like, hey, I don't know if my employer is actually withholding this or not, you can adjust your W-4 to have extra money withheld on line 4C. And if you're not familiar with my YouTube channel, you can check that out. Look at what your filing status is, and I have a video there to help you to fill out your W-4 properly. So when I'm referring to line 4C, that's where you put how much additional you want withheld for each pay period. Now, as I'm saying this, and it might be confusing because remember I said you don't have the option to opt in or out of the initial Social Security and the initial Medicare tax that's withheld. When the additional Medicare tax is calculated with Form 8959, what will happen is that tax, as I mentioned, will flow to Schedule 2, which then will show up on the second page of your 1040 underneath your initial income tax liability. Anything that you've had withheld for income tax purposes will flow to that to cover that additional tax. I bring that up because if you have the additional money withheld on line 4C, it will still be moved to cover that when you actually go to file your return in the spring. Okay? Now, I know for me, taxes are exciting, and you may be listening to this because taxes are exciting for you too. But chances are they're not exciting for you. You just realize you have this issue where you keep owing additional Medicare tax and you don't understand why or how to rectify it so that you don't have a balance unexpectedly at the end of the year. If that's you and you still have questions, feel free, if you're checking this out on YouTube, to leave your question in the comments. If you're on Spotify, feel free to do the same. But I also want to encourage you to go over to bowenstaxsolutions.com and subscribe to Tax Tips with Timalyn. That's where I take issues just like these and I break them down into a way that you can better understand. Okay? Now, I mentioned in previous episodes, I'm ramping this back up. There will remain the free version, but there will also be a paid version as well. All right. So go check that out. If you have any feedback for recommended articles you'd like to see me write over there with Tax Tips with Timalyn, be sure to let me know that in the comments as well. If you're here because, yes, you had the additional Medicare tax, but you really can't afford to pay all this off by the time the IRS wants that payment, you can also book a call with me at bowenstaxsolutions.com and we can talk about if you're a good fit to work with me or not, to have me negotiate a payment arrangement for you with the IRS, because we want something that is going to satisfy the IRS but not bankrupt you, right? So thank you so much for tuning in. Thank you for liking this episode, sharing, helping me to fill the tax literacy gap one taxpayer at a time. And even if you don't book a call with me, but you found this helpful so you could work with somebody else or do it yourself, thank you for that too, because it doesn't have to be me. I just want to make sure that you get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.